Hi there. My name is Jacob Irwin, and I work at Benefits by Design. I am pleased to be joined today by one of our client managers, Jackie Cole, and a member of our underwriting department, Josephine Jeru, who will be talking about the renewal process at BBD. Stick around after the main presentation for a question and answer session. At BBD, we operate on the principle that there are no silly questions, ever. If you do have a question, please type it into the GoToWebinar question interface, and we will do our best to address them at the end of the webinar. This webinar is being recorded. You'll receive a follow-up email with a link to the recording after the webinar. If you have any questions or concerns about this webinar, please contact us at socialmedia@bbd.ca. Both Jackie and Josephine, our speakers, have been with BBD since 2011. Josephine has done a lot of traveling and has lived and worked in 3 countries, Kenya, the United States, and of course Canada. Jackie has long had a passion for interior design and is currently working towards getting her diploma in interior design during her spare time. And so, without further ado, let me welcome Jackie Cole, who will be kicking things off.
Thank you all very much for joining us this morning. We're very excited to get started, so let's dive right into the basics of understanding renewals. So every time a group is placed with BBD, the group is guaranteed their quoted rates for a certain length of time. These are known as rate guarantees. At BBD, our rate guarantees for critical illness, short-term disability, extended health and dental are 16 months, and then 28 months for life, accidental death and dismemberment, dependent life, and long-term disability. At a group's first year renewal, in order to be able to maintain those 28-month rate guarantees, demographic changes within the group cannot exceed 15%. A question we often get asked is, why are there different rate guarantees for different products? The difference in the rate guarantees comes from the frequency and cost of claims. So short-term disability, health and dental have high frequency, low cost claims, while the opposite is true for life, accidental death and dismemberment, dependent life, and long-term disability. So there's likely to be more claim fluctuation with the first category that warrants funding adjustments sooner. Life and long-term disability have less probability of claims, and therefore the need to adjust the plan pricing is less critical. Additionally, these benefits are fully pooled, so rate changes are not impacted by claims experience. So why are renewals prepared, and when can you expect to receive them? Renewals are completed on a group annually. They're required to ensure the plan is being properly funded based on the group's usage and their demographic makeup. At time of renewal, we evaluate the claims experience of a group, trend in inflation, as well as the demographics. This includes age, gender, occupations, and salary. Renewals are always provided a minimum of 60 days prior to the client's renewal date directly to our advisor partners. There is a 4-month lag from the time when a group's renewal period ends to when the actual renewal rates are implemented. This gives BBD time to analyze and prepare the renewals, provide them to the advisors, and then in turn allows the time for advisors to present to their client. It also gives the opportunity to review the group's plan design, as well as room for negotiations if need be. This lag time is taken into account when calculating the group's renewal. Josephine will explain this later on in the presentation. Next, we'll move on to demographic changes and how they impact a renewal. Oh, sorry, I skipped over. What to expect the first year. So when a new group is placed with BBD, we believe in the sustainability of our benefits plans. We understand that there's going to be challenges during that first year renewal. Because of this, we've implemented a strategy to help our advisor partners and their clients manage their benefits plans by being informed and staying up to date during that critical first year. So during a group's first year with BBD, there's going to be 3 touch points between an advisor and their client manager. These touch points are at the 3, 6, and 9-month marks. Advisors will be provided with their client's claims experience at each point, as well as suggested alternatives at the 6-month mark if a group is trending towards a high first-year renewal based on their usage to date. Additionally, we will also provide a projected renewal at the 9-month mark if no changes have been implemented to the plan design and the usage continues to run high. The 369 process sets the expectation right from the onset to ensure a smoother renewal process, and this helps advisors through a challenging first-year renewal. Next, we're going to look at demographic changes and how they impact a renewal. In this section of the presentation, we're specifically going to be looking at both the life and long-term disability rates and how demographic changes impact them. So the following factors are always taken into account. Industries that have a higher rate of death or disability will have a higher life rate. To give you an example of this, we'd be looking at a trucking company versus, let's say, a software company. The older the employees, the higher the life rate will be. Life rates are always higher for males than they are for females. This is because females have a higher life expectancy than males, though over time we are seeing this gap becoming less. As of now, it's currently about a 4-year age gap between the two. Finally, a higher life volume, especially for an employee in a higher age band, for life premium results in a greater risk, and in turn, this is going to have an impact on the life rate. To give you an example, adding an older male with a high salary and risky occupation will have a bigger impact on a life rate, especially if it is a smaller group and there is a low spread of risk. The following factors are always taken into account when determining an LTD rate. Again here, industries with a higher rate of risk will also have a higher LTD rate. Again, older employees have a higher rate. With that said, LTD rates do start decreasing once an employee is closer in age to the termination age of the benefit, even though they're continuing to age. Long-term disability rates are higher for females than they are for males. This is because women having more health complications during their childbearing years, which results in turn in more disability claims. Additionally, LTD rates are higher for women due to mental nervous conditions, which are the greater factor because women are more likely to seek help for these conditions. With that said, over time, we are starting to see more males seeking help, however, not to the same extent as females. Employees with a higher salary pose a greater risk on this benefit, as payouts are much more significant than for those employees with lower salaries. Therefore, this further impacts the rate. With that said, employees with lower salaries do have less incentive to return to work, as the gap between their initial salary and disability is not as significant as a higher salaried employee. The shorter the elimination period for this benefit, the more impact it will have on the rate, as claims would begin sooner. The longer the benefit period, the greater the risk, and in turn, the more impact on the rate. Something to note is that the likelihood of an employee on disability returning to work at the end of the own occupation period significantly reduces if that employee continues to meet the definition of total disability. Finally, the makeup of the employees within a group will impact an LTD rate. While an industry may be risky, such as trucking, the occupations within that group may consist entirely of office staff, so this results in a lower rate because there would be less risk. I will now pass it over to Josephine, who will take you through the renewal mechanics.
Thank you, Jackie, for your insight. I'm going to get into the most important calculation used in coming up with renewal rates, which is the loss ratio, as shown on your screen. This is basically the ratio of a group's paid claims to billed premiums for a given period. In simplest terms, the insurer will use the loss ratio of your group and compare it to the target loss ratio set out when the group was first quoted to come up with a renewal rate action. In other words, this is the break-even point. That is, the point where the premium is able to pay claims as well as insurer and administrative expenses. Weighted premium and weighted claims. BBD uses a 3-year weighting as this is more reflective of a group's claiming. If we used only 1 year, a one-time high claim could throw everything off. 70% of the most recent year's claims and premium counts towards calculating the final rate, with 20% of the prior year and 10% of the third year's claims and premium counting toward the final rate action. For groups that have only 1 year's claims experience, 100% weighting is on current year. For groups with 2 years, 80% is on the current year and 20% on the prior year. Using the loss ratio calculation discussed on the prior slide, we can now compare weighted claims to weighted premium to get the paid loss ratio. To expound on this even further, we now introduce reserves, or the IBNR, into this formula. What is the IBNR? The IBNR basically stands for incurred but not reported. This is a portion of the group's premium that is set aside to cover BBD's liability in the event a group contract is terminated. When a plan is terminated, there will be a runoff of claims for a month or two, and a pool of money called a reserve needs to be set aside to establish this to cover this liability. The IBNR is usually established in the first policy year with a new insurer, but always by the second year. The reserve is always in flux. Basically, what that means, it's increasing and decreasing based on the change in claims year over year. So now, when we add weighted claims to the change in reserves, we get incurred claims. Building on the paid loss ratio mentioned in the prior slide, we can now get the incurred loss ratio by dividing the incurred claims to the weighted premium. The next component in renewal calculations we will discuss is the cost trend factor. The cost trend factor, or inflation factor, is the anticipated annual cost of providing a benefit plan, which usually increases year over year. In healthcare, this could be the increased cost 1 year to the next of prescription drugs or medical supplies, such as a wheelchair or a knee brace. In dental, it could be the cost of an appliance or the materials that go into making a filling or a crown. Factors that influence the trend include increase in usage. In recent years, we have been seeing a higher incidence of high-cost drugs, as well as upward trend on higher pyramid usage, especially massage. Some insurance providers use a different health or dental trend factor for different provinces to reflect increased or decreased risk of underwriting the plan. For example, Alberta, unlike other provinces, does not have a published dental fee guide and therefore has a higher dental trend factor. And finally, the general aging of the Canadian population also affects the cost trend factor. With long life expectancy, there is increased consumption of a wide range of health products and services, which in turn drives the annual rating action of a plan. If you think of the baby boomer generation moving through the system, we can see how much longer people are working and how much more there's a demand for healthcare services and products. In the past 20 years, the trend figures have never been zero or a negative number. They are consistently between 5 and 12% for dental and 10 to 18% for extended health, depending on the provider. As such, it can be a very difficult discussion to have with the plan sponsor if the claim usage is on par with what the insurer has set as target, yet there's still a noticeable increase in the renewal rates due to trend. Another factor we will consider in calculating renewals is credibility. The credibility is the degree to which a group's own claims experience is used to set the premium rate. Not all groups are 100% credible for their experience. If a group was 100% credible, the required change based on claims experience alone would be enough, exclusive of trend and reserves, and that would be the resulting rate action. But if the group is any less than 100% credible, we only apply the level of credibility that is required, that the required change to come up with the rate action. This credibility chart should give you an idea of how BBD calculates renewal based on the size of the group and the length of time with us. So for instance, if a group is 50% credible, the 50% of the rating action will be from the required rate change calculated above. We will now consider the other external factors that affect our renewal rate action. This is not an exhaustive list, but should give you an idea of some of the other moving parts in the renewal calculation process. The The first factor would be regulatory or legislative. Tax changes can impact renewal for all benefits. Canadian provinces have different tax legislations. For example, sales tax is only applicable to Ontario, Quebec, and Manitoba for insured premiums, with the exception of health and dental premiums in Manitoba. Other examples are higher drug pooling charges like non-pharmacare provinces like Ontario versus pharmacare provinces like BC and Saskatchewan. Quebec also has different industry-wide drug pooling charges through the QDIPC or QDIPC, which is the Quebec Drug Insurance Pooling Corporation. Economic factors like inflation, interest rates, and unemployment rates vary by geographic location and can affect renewals. For example, high unemployment rates can have a significant impact on a disability plan. On the other hand, low unemployment may increase dental claims as this benefit tends to be more preventative and therefore more predictable. We also take into account the advisor and insurer or TPA relationship. A group that switches carriers every year or every other year is not regarded favorably by most carriers. It takes time to build healthy reserves, credibility, and a stable business relationship with the insurer or TPA. The demonstrated willingness of the advisor to work with the insurer or TPA in the long-term sustainability of the plan will go a long way in keeping all parties involved happy. At this point, we're going to switch back to Jackie for tips on presenting your renewals and costs to keep in mind when switching carriers.
Hey there, I'm just going to jump in for Jackie here. So a few tips for presenting renewals to your client. Keep it simple. Chances are your client is going to be overwhelmed when presenting this information to them. So keep it simple and don't overload them with too much information.
Thanks, Jacob.
Okay, perfect. Hi, Jackie.
Hi. As we have done for you today, simplify the calculation for your client and the key points that are included. So look at the incurred loss ratio versus target and show them where their usage falls. Highlight if there are any LTD or STD claims. It's always good to keep your client informed and on top of these claims, as well as to help them understand the process. There's a good chance that they may have a question, which provides you the opportunity to show value. Make sure to let your client know if they're eligible for a higher life or long-term disability non-evidence maximum. These are based on the size and volume of a group, and if your client has experienced growth within the renewal period, they are likely eligible. If your client is eligible, this information is going to be included in your renewal package. Always remember to add value beyond price. All of the tips mentioned provide the opportunity to bring value to your clients and show them that you care and are invested in them and their business. Make sure to note if any employees are eligible for excess life and/or LTD coverage. We cannot stress the importance of making sure your client is aware of this enough. Employees must be made aware of any excess coverage that is available to them, which they can then choose to apply for or not. It is solely at their discretion. We are all too familiar with how our lives can change in an instant, and knowing that your client's employees are properly covered for life events brings greater peace of mind. If you were able to negotiate a renewal on behalf of your client, make sure you show them the originally proposed rates and the negotiated rates. Make sure you know how the premiums are split between the employer and employee. This can be a very good strategy to help sell an increase, especially by simply changing the percentage of the cost sharing. You just have to be mindful of the tax implications of each benefit when you are going to propose this strategy. Know your client's plan design and where their usage falls. Have suggested plan changes and different options available to them prepared for your renewal meeting. Costs to keep in mind if your client is thinking about changing carriers. So at BBD, we do understand that it is necessary for a group to market every few years, and that sometimes a group does need to change carriers for different reasons. Oftentimes, the driving factor for a group to move to another carrier is the savings being offered to them. At BBD, we strongly believe in the sustainability of a group benefits plan. Some carriers may try to buy the business by undercutting the renewal rates. While these savings may be attractive at first glance, the likelihood of the client having a high first-year renewal with the other carrier is almost certain. Therefore, when reviewing the final negotiated rates versus the quoted rates from other carriers, it is important to make sure your client understands the impact of properly funding their plan. They should also consider the following costs involved when moving carriers. So there's company time required to review options and make decisions, company time required to re-enroll all employees. This can be especially challenging for companies where employees work an abundance of different shifts. Loss of the buildups of reserves. So the longer a company is with a carrier, the more they will build up their reserves, and in turn, this helps to provide a more favorable renewal. So if the group is larger, this could be a very significant amount. Company time to retrain the plan administrator. This would include learning new technical platforms, differences in claims adjudications, differences in calculating renewals, etc. Company time to communicate the change to the employees. There's likely going to be potential disruptions in claim payments, pre-authorizations, etc. More difficult to obtain quotes. So as Josephine previously mentioned, if a group is constantly moving from one carrier to another, they will be considered less favorable. To wrap up everything, we'll go over the main points from today's presentation. So newly quoted groups are given a rate guarantee. Renewals are required to make sure the group continues to be properly funded on usage and demographic makeup. BBD uses a unique strategy called 369 to check in with advisor partners during a group's first year. This helps lessen the surprise for a high first-year renewal. The demographic makeup of a group can impact a rate. Main factors to consider are industry, age, gender, and salary. BBD uses a 3-year weighting for claims experience. This gives us a more accurate picture of the group's claiming pattern. The credibility of a group increases with size and with length of time with BBD. The larger the group and the longer they're with us, the more credible their experience is going to be. Always remember to bring value beyond price to your client by using the tips from the presentation. Focus on the sustainability and longevity of the plan rather than focusing on the price. Encourage your clients to review their plan design as well as consider the cost and time involved when switching to a new carrier. I'll now pass it back over to Jacob as we take some time for questions. Thank you all very much.
Thank you to both Jackie and Josephine. Just to remind everyone before we jump into the Q&A portion of the webinar that this webinar is being recorded. The recording will be sent to you in our follow-up email. So as we go through Q&A, please keep submitting your questions through the GoToWebinar question interface. And I'm just gonna check for questions here. Okay, so I've got one. How long does a renewal take to prepare?
Thanks, Jacob. I'll take this one, Joe. So as we alluded to earlier on in the presentation, it takes approximately 4 months for a renewal to be implemented. So this allows BBD time to analyze and prepare the renewal. It gives time for the client manager to send it out to the advisor. It gives time for the advisor to present to their clients, and then also gives an opportunity should there be any negotiations or if the group is marketed.
Awesome. Thanks, Jackie. And so our next question looks to be more directed towards Joe. So Joe, as an underwriter, what is the first thing you do to prepare a renewal?
The first thing would be, I think, demographic change, comparing the demographics this year versus last year. In particular, I guess I would look at the gender ratio makeup, how many males versus females or vice versa were added. Also, how many new additions and terminations and what was the impact on the rate? So if we have newer, younger employees and maybe older employees were terminated, that would impact the rates favorably on the pool side. And basically any significant plan changes that were made. So increase in, say, life coverage if someone applied for excess or LTD excess coverage, depending on the size of the group, that might significantly impact the rate.
Okay, awesome.
So demo changes, basically, that's the main thing to look for.
Okay, thank you. Okay. Why does group size affect the credibility? I guess this could be for either of you.
Okay, I will take that. It's basically based on the whole concept of the law of large numbers, or life years. But what it is the more the longer the group is with us, the more predictable the claims are, because especially with dental, we have a cyclical pattern where we have groups that would claim high 1 year and then not as high the next year, and then the third year would claim higher. So there's like a 2-year cyclical pattern with dental. So and I'm just using that as an example. So having a 3-year time frame or more would give us a better idea of what the claiming pattern for that group is. So in that sense, length of time would come into play, but as well as the size of the group, because the larger the group, the more predictable the claims will be and the more spread out the risk is. So there's less fluctuation versus a small group. Say we compare a 50 life group with a 5 life group. If we have one person who's had a high claiming year, that it's going to impact the 5 life group a lot more than the 50 life group. So that's how the law of large numbers comes into play.
Great. So I've got a few more questions here. Okay, here's one. So if a group is not 100% credible, where are you pulling the other rate experience? Is it coming from your book, your insurance partner's entire book? How do you best explain this to the client?
Okay, I will take that. So if a group is not 100% credible, we have gone over the different moving factors that affect the rates calculation. But basically, we are looking at the trend inflation, cost trend factors, and as well as manual rates to some degree. So I hope that answers your question. It's not a black and white answer, but there's trend inflation and the manual rates somehow are built in. It's technical and it's very hard to get into the nitty-gritty of it, but that's the answer in a nutshell. And I hope that answers the question.
Okay, thank you. Okay, so this question is, what is weighted premium for the IBNR / weighted premium calculation?
Sorry, can you say that again?
Yeah, could you specify,
So
I'm not exactly sure what the question is looking
so
for.
the question that's been submitted is, what is weighted premium for the IBNR and weighted premium calculation? I think they're asking what do you mean by weighted premium? I think they want to just clarify that.
Got it. Okay. By weighted premium, if we have a group that has 3 years of claims, we are looking at 70%. So for example, we have a 10 life group that had 10,000 of claims the first year, in the most recent year, and then 9,000 claims in the second year, and then maybe 8,000 claims in the third year. So we would put 70% of the renewal rate calculation on the 10,000 that was claimed, and then 20% will be put on the 9,000 for the second year, and then 10% would be put on the 8,000 for the third year. So basically, we're spreading out the renewal rate calculation by taking into account the last 3 years with more emphasis on the most current year.
Okay, perfect. Here's another question. How do you show the advisor how a client's reserves are building or not?
So
So I
this is
guess,
the amount that, sorry.
go ahead.
So in order to be able to see that amount, included in the renewal package is the renewal analysis. And on that specific page, it gives you the weighted claims, it gives you the weighted premium, and it specifically shows you depending on what year you're on. So if it's the first year, you're going to see that full percentage of IBNR that's being applied to their first year renewal. And then moving forward, it's going to be the difference in whatever it is between the first year and the second year. It's just going to be either going to be a negative number or a positive number. It's all inputted in that calculation and reflected on the renewal analysis page of the package.
Awesome. Let's see here. There's a couple more. Okay. Does your 3-year weighting ever change depending on the size of the group? Or does it remain the same no matter what?
I think based on the chart, we can see that it does change based on the size of the group. So yes, it does change based on the size of the group.
Okay, that's great, thank you. And we are running a little short on time, so perhaps we'll do only a couple more here. Great, so can you give some more details on credibility and how it affects a renewal?
Okay, basically, in the most, I would say, user-friendly terms, the credibility is showing how much a group, how much emphasis, or how predictable the group's experience is. So with lower credibility, we have less rate action based on the group's experience. And with higher credibility, we have more rate action based on the group's experience. So what that means is your renewal rate will have more impact if the group is the renewal rates calculation for a larger group will be based on the actual group's experience a lot more than for a smaller group.
Okay.
I hope that clarifies it. If not, we can always answer these questions a little bit more in depth, and people can leave their questions there if they need more clarification.
For sure. You can also submit a more specific question to social media at bbd.ca, and we'll make sure it goes to the appropriate person and we can get you your answer. Okay. So we can do maybe one more question, and I've got it here. So maybe Jackie, if you want to answer this one, can you give an example of the impact of the 3-year weighting system?
Okay, so an example of the 3-year weighting system. So let's say a group let's say they had 2 very positive years of experience and they're in their 3rd year. Their 3rd year renewal is very high and the incurred loss ratio is way above target. So those 2 years of prior experience are going to come into play on this renewal and help get it a better rate action. So it will actually reduce the required increase than had the renewal been solely based on the current year alone, which would have been that high claiming year where the incurred loss ratio is well above target. So that's how it can be very, very beneficial to a group. when they do run into the scenario where they have a high claiming year.
Awesome. So we are out of time for questions. If anyone would like to, ask another question that maybe didn't get answered, we did get quite a few questions submitted. You can again submit it to social media at bbd.ca, and we will then get it to the appropriate person who'll be able to answer your question, and we'll get you your answer, okay? So I'd just like to say a big thank you to Jackie and Josephine for talking about the renewal process at BBD. So thank you again for everyone joining us here today, and please enjoy the rest of your day. Thank you.